What's going on, guys? Let's do a little technical analysis from, kind of a macro standpoint, bigger time frame. So I'm going to be taking a look at the weekly chart on Penn National Gaming, ticker symbol PENN. Um, let's just take it all the way back here, going into what is this, March, April 2021, coming off these highs of $142. Really, ever since, that March, middle of March area, we've kind of sold off here, and we've, kind of had a nice slide. Then we put in like a lower high here. Then we had a little bit of consolidation. Then we've had a nice slide here. Stock really hasn't looked good, but as with that said, either has a lot of the other small cap stocks. A lot of these stocks that really, really did tremendous in 2020 and the very beginning of 2021, they all did fairly well. I mean, considering where they came from, and now they're kind of just back, realistically to where they were in 2020. So, with that being said, is it a time to buy Penn? Should we be loading up here? Should we just be selling out of our position and looking for something else? It depends on what your average order entry is. I would love to hear what your guys' average fill price is on your position. Doesn't have to be to the exact cent, but are you somewhere over 100? Are you in that 70 to 80 range? Are you, in that 50 to 75 range? Have you been holding this for a long time and you're in that 30 to like $45 range? I think the people who are feeling the most pain are obviously anyone who's bought the stock within the last 6 to 8 months. I think you guys are probably down the most, but considering if you take dollar amount away, I think the people who probably feel the worst about this stock is people who had the stock from the beginning, people who had the stock from early 2020, late 2020, and now the stock is pretty much at break even. So you're kind of looking at your portfolio and you're like, man, I was up so much, over $100, over $142, and then now a year later, year and a half later, I'm pretty much right back where I started. I made no gains whatsoever, and maybe even I'm losing at this point in time. But with that being said, here's what we need to keep an eye on. We do have earnings here on the 31st. From the weekly standpoint, we are down here at the 200 simple moving average. This is going to be the strongest level of support. So we are going to get an answer fairly quickly. And when I mean quickly, I mean within the next 2 to 3 weeks. Where is this stock going? If this stock is truly going to reverse and we're going to continue to consolidate sideways off this 200-day moving average here, these earnings are going to help us, give us a boost back up. Now, are we coming all the way back into this zone here, into the plus 80, $100 zone? No, I'm not saying that. The first real potential area that I could see us hitting is like that $50 to $55 mark. That's saying that earnings are going to be good. That's saying that there's going to be a rotation coming back into some of these, speculation plays, some of these high growth plays, some of these stocks that have been continuously beat down for the past 6+ months, right? And, we'll get a clear answer, but, we need to see that rotation. It can't just be like, hey, small caps had a great day today, and then 4 days, the rest of the week, we just sell off for 4 days. It can't be like Penn looks good, it's up 10% today, and then it gives back 8% tomorrow. You'll know, okay? When I say that you'll know, you'll just know. You'll look around. Things will be up 5% today. They'll be up 6% tomorrow. They might have a down day, down 1%. They'll be up 5% the next day. These things have been really beaten down. So if this level is going to hold for us, which being that level, the 200 simple moving average, which is technically, I mean, when you're talking about the strongest point of control for the bulls, that's over the 50-day moving average. Everything else in between is just noise. If you're talking about point of control for the bears, anything below the 50-day moving average, generally speaking, the bears are going to have control. Now, if we get onto a bigger, like just a bigger picture, The 200 is the granddaddy of all moving averages. Okay. As of right now, the bulls have lost the 200-day moving average, and we lost that 200-day moving average on Friday's close. Didn't lose it by much. However, we lost it. So with that being said, if we continue to chatter around this 200-day moving average and we start testing this channel going back to the 13th of December, let's say earnings aren't what they're supposed to be. Let's say the market doesn't like what they hear. This could get a significant fade, and that fade being into that $36 range. So maybe another 8 to 10 point slide. That's definitely not what the bulls want to see, because if we do come down into this mid sub 40 range, $35, $36 area, we could come back to the 200-day moving average, and now this level could act as a form of resistance to just chatter around here sideways and continue down. You know, how long it'll last, it's completely up to the markets. You know, it's not something that I can predict. It's not something that you can predict by looking at a chart. It's not something that you can say, hey, you know what? I think that we're oversold. I'm just going to buy here and I'm going to be great and everything is going to come back. You know, that's all fine and dandy until we continue to do this, right? Until we continue to do that for the next 9 to 12 months. Okay. Now, you know, God forbid you invest down here and then you come up some and you get happy and then you're down, and you come up some and you get happy and you're down. You know, God forbid we do that for the next 9 to 12 months. That's not what we want. So we don't want to get stuck in those plays. If you are anywhere in this zone, you feel like you've been stuck in this play long enough, right? So that's not what we're looking to do. We're either looking to get out of this play, you know, roll our money into something else, or we're looking to start to see, is this going to be the short-term bottom here? Are the bulls going to step up, you know, kind of put their pants on, you know, and actually make a stand here? But like I said, we're going to need to see that overall rotation coming back into the small caps and coming back into some of these stocks that really got beaten down. So definitely want to keep your eye on that. Keep your eye on these earnings. Keep your eye on this channel here from the 13th of December. If we do start to confirm this level heading into this short trading week, you know, on the 18th, which is Tuesday, right after Martin Luther King, if we start to confirm this to the downside, watch out. Okay, watch out. I would not try to, you know, catch this falling knife and think that, hey, you know, let me buy this dip. No, let's let this thing see where it wants to, you know, where it wants to land. You know, where's potentially the soft landing spot for this thing. Then we can think about scooping it back up to the long side. Now, if we do get a little bit of a bounce this week, I'm all good with that, but we're really going to need to get out of this zone. And when I mean this zone, I mean, we're going to need to start taking out $48, and we're going to need to start taking out $50. It does not even interest me long yet to say, hey, you know, we're going on a rally until we start to reclaim, you know, at least $60, $65. When could that be? Could be months. It you know, there's no telling. It could be months. So with that, the biggest level, we need to take it baby steps, one day at a time. You know, we can't be thinking about price going back up to 60, price going back up to 80 when we're trying to hold on to the 200-day moving average. What we need to do first and monitor and manage first is, can we hold $44.50? Can we hold that area? If the answer is yes, can we reclaim $48.64? Great. If the answer is yes, can we get over $56? Those are the levels that you're playing. You're playing 44 to 48, 48 to 56, 56 to 59, 59 to 64. That's how we're going to play this one step at a time. I'm not going to sit here and say, you know, it's 44 today, my price target is 64. No, my short-term price target is getting back up over the 5-day moving average, and that price is around $48, $49. Second point of attack is getting into that next channel, and that's over $57. Until we get over $57, be careful buying dips, because they will look to, you know, sell the rips. I hope that helps. Guys, if you want, join my Discord. That link is down in the description box below. Also, Also, please subscribe to my channel. I'm trying to get to 1,000 subscribers within the next 30 to 60 days here. I'm trying to put out as much content as possible that's going to help people with, different particular stocks that you guys are playing. Also, give me a thumbs up. That really helps my video get out to more people. And leave me a comment. I want to know what your average dollar cost is on Penn. Remember, it doesn't have to be the exact penny, but are you plus 100? Are you between 80 and 100? Are you 50 to 80? Or are you sub 50, right? Like I'm below 50. I'm holding here at $46. Let me know, and I'll see what I can do for you guys as far as technical analysis. Kind of keep an eye on this thing and see, what are the best areas of opportunity where we can potentially make some money on this stock. But until next time, guys, I will see you guys all on the next one.